This is Barry Zalma speaking about the true crime of insurance fraud, and today the real cost of fraud, called the largest residential burglary of all time. After 12 months trying to get insurance on over $3 million in jewelry and a like amount of fine arts, a Taiwanese man who was a wanted criminal in his own country convinced two American insurers to agree to insure him against the risk of loss to the contents of his home. To obtain the insurance, he concealed from the American insurers that he was, at the time he purchased the insurance, an alien a court had ordered deported, that in his home country he was a wanted criminal, that he had left his home country with over $60 million in checks unpaid, that every insurer at Lloyd's, London, had refused to insure him, that all of his property was appraised for more than twice its actual retail replacement value, and that most of the antiques he had insured in reliance on an appraisal attesting to $3,500,000 in value were fakes. His application, taken at face value, gave the impression to his insurers that he was a Beverly Hills investor with appropriate concerns for security. He also made it clear that he was willing to pay a high premium for the protection, a fact that should have raised the concern of the underwriters asked to accept the risk of loss of his property. Within 7 days of the delivery of his policy, a burglary was reported. A total of $7 million of specifically identified and scheduled personal property was reported stolen. In addition, he claimed $2 million in unscheduled diamonds were stolen from their hiding place in one of his 50 suit coats hanging in the closet. The burglars had no problem effecting the burglary because the insured was out of town. The burglars circumvented what the insurers was told was a sophisticated central station alarm system because it was merely a local gong-type alarm that had never been turned on. They defeated the promised Class E safe, one that requires at least 30 minutes to drill out the lock, with a simple wood drill, since the actual safe was nothing more than a locking gun cabinet built into a closet. The insurers refused to pay because they believed the insured made material misrepresentations and concealed material facts in the purchase of the insurance. The insured retained a prestigious plaintiff's bad faith lawyer to represent his interests. Because of the reputation of counsel for the insured and the fear of an extra-contractual judgment, the insurers, against the advice of 3 different defense firms, settled for more than $4 million of the $7 million claim. The insured's lawyer took 50% of the insured's creditors took 20%, and the insurer took what was left. Because the IRS was unable to assert its multi-million-dollar lien in time, it got nothing. The insurers spent hundreds of thousands of dollars defending the lawsuit brought by the insured. To save $3 million off the policy limit claim, they paid $4 million that they did not owe. There was no question the insured committed fraud when he got the policy. There was little question that the burglary was also a fake. The burglars even threw some of their loot off a local pier where it could be discovered to make everyone believe it was a legitimate burglary. Even if the burglary was legitimate, There was clearly no coverage. A court with just a small amount of gumption would have declared the policy void. The insured had misrepresented that he had been refused insurance by several insurers and was canceled by another. He concealed the fact that he had neither a central station alarm system nor a Class E burglar-resistant safe. The promises he made when the policy was issued were false. The insurer believed the misrepresentations and facts concealed were sufficient to void the contract, because that is basic California law, and this loss happened in the state of California. After a trip to China, counsel for the insurers sought to take the examination under oath of the insured's sister, who was also named as an insured, and 2 years of discovery. Counsel for the insurers moved the court for summary judgment, confirming rescission of the policy. The evidence available of multiple misrepresentations and the concealment of material facts, rescission was warranted, and counsel was confident the court would agree. The day before the insurer's counsel were to appear for oral argument on the motion for summary judgment, the insurers and the insured's lawyers settled the suit without communicating with their own defense counsel and against the recommendations of defense counsel. Common sense should have shown that an insured with a legitimately acquired $7 million valued policy would never settle for less than $7 million if he suffered a true loss. That he was willing to settle should have convinced the insurers the claim was fraudulent. Rather, the reluctance of the court to take a position, it had moved the oral argument 3 times, lack of action by the courts and the police agencies, and the lack of courage on the part of the insurers cost the insurers involved more than $4 million in settlement payments and many thousands of dollars in defense and investigation costs. To recover the money lost by paying the insured, the insurers would only pass the payment on to other honest insureds and to the insurance company's own reinsurers. The insurer's fear of punitive damages that shadow every claim made in the states that recognize punitive damages for breach of the covenant of good faith seemed to be impossible for the insurers to overcome. To stop the criminal who brings a fraudulent claim, insurers must not be frustrated by the continual refusal of the authorities to prosecute insurance fraud. They should decide to recoup the monies paid to the perpetrators of fraud from the frauds by judgment or orders of restitution in a criminal case, rather than the honest insured whose premiums are paid and raised because of the fear of the insurer. Some insurers believe they have no choice but to settle, because the exposure to punitive damages in a bad faith suit, no matter how frivolous, is so great that a jury might believe the fraudster's arguments. Those insurers fail to realize that paying those who perpetrate fraud to eliminate the exposure to punitive damages, regardless of the cost of defense of bad faith lawsuits brought by fraud perpetrators, is not cost effective. Bad faith is a two-way street. Insurers cannot sue for bad faith by their insureds, but may sue to recover the damages they incur as a result of fraud. Criminal courts, when they convict insureds of fraud, should be encouraged to order the person convicted to make restitution of all the investigative and legal expenses incurred by the insurer as a condition of probation. When an insurer makes a payment of $4 million, for a claim it knows is fraudulent, even if it is a $3 million savings over the policy limits. The insurer is issuing an engraved invitation to every con artist in the country to move in and try the same thing. The expense is not for just the obvious fraudulent claim that is paid. The major expense is all of the other claims that are made with the knowledge that, when pushed, the company will fall on its knees and pay. Once an insurer gets a reputation for paying for fraudulent claims, rather than fighting with all of the assets, those who perpetrate fraudulent claims will gather like vultures over a rotting carcass, ready to pick the insurance company's bones clean. The reverse is also true. When an insurer makes it clear it will never pay a fraudulent claim, regardless of cost, those who earn their living by fraud will stay away. It is time that prosecutors learn that the victim is not the giant insurance company, but each and every person who buys insurance. In this real case, many years after the settlement, counsel for the insured told me in a private conversation that when he received the money from the insurance company, his client insisted on cash, and he had to run to the Federal Reserve Bank to get $1 million in cash to pay the insured his share of the $4 million settlement. And that money was used to escape prosecution by the Immigration and Naturalization Service, who wanted to deport him. We don't know where he is now. The last I heard, he was running a bed and breakfast in Costa Rica, but I don't know if that's true. The story ends in a case where an insurance company should have shown its courage to defeat a fraudulent insurance claim and did not. Thank you for your attention, and I hope you who listen will not make the same mistake.